That aside, what's the view then on Ultratech? And given that the CCI approval for the acquisition of Kesoram has been received close to 7,600 crore rupees, Sanjeev, your take?
Yeah, so Avansi, Ultratech is arguably the largest player in the country. Kesoram is one of the group companies. They consolidated first the business from Grasim. They took over some of the assets from JP, and they are in the process of consolidating their business. Arguably, now you will see the best season for construction and cement demand rising. I think input costs have fallen. This would be a very, very big positive. They would now reach somewhere in the range of 145 to 150 million tons, which arguably is more than both Ultratech and Ambuja put together and double of that. So I think they are consolidating their presence in the market. You know that 53% of cement sales is in the hands of five players, and I think Ultratech on any decline would be a buying opportunity. This is one of the pillar stocks of the Nifty, and we think that construction activity, as it gains more momentum, Ultratech, once price rise comes, will be much better placed. Also, you must realize petcoke prices have fallen reasonably, which should aid their margins.
Okay, there you have it. That's the view coming in on Ultratech. Meantime, some of the other stocks as well that will be in the spotlight include an IndusInd Bank. Remember, we just discussed how they said that the cost-to-income ratio is expected to improve by about 100 basis points in FY25 and 26 each year. Sanjeev, this coming in as a positive.
Correct, and I think from what I heard that they are also seeing intense competition as far as the the liability franchise. But they are garnering themselves. You see, what has happened is, along with HDFC, some of the marquee names have not cut rates, and that is what has set them apart. Because yes, the credit to deposit ratio has been on a little skew, but I think it will even out. The credit cost guidance reducing is a very big positive. IndusInd has been one of the star performers as far as the private banks go, and I think their biggest niche area being the auto sector. That is where they will really be much better placed, as auto sales are at an all-time high. So I think this is a very good fit after this correction, and I expect Bank Nifty to actually lead the winners this time, particularly on the private bank. So yes, IndusInd, ICICI, Kotak, Axis, HDFC, that whole basket is looking very strong.
Okay, that's the view coming in on the entire private sector banking space. We'll also understand a little bit more about the FMCG sector in a bit. But in the meantime, why don't we get in your thoughts, Sanjeev, as to what's looking good amid the underperforming FMCG basket? Where is it that you're finding pockets of value in a market like this?
Yeah, so we see two of the picks have been Nestle and Godrej Consumer, and they are in the large cap. Bata and Patanjali are two names which we have. Patanjali has got in the eye of the storm after the recent Supreme Court talk on the ads regarding the medicine. But I think that's a passing storm. The type of growth we are seeing is unprecedented, particularly in tier 2, tier 3 cities, and their margins are bound to expand. So, be a little contrarian, pick up Patanjali around these levels. We think this is a passing storm, and it has only more talk rather than actual effect on the underlying performance. The company has been an outperformer. We think this is the best time for rural incomes to grow. Bata is the other pick, which is again very strong play on the contract side. Margins expansion and the advent of people moving from the campuses to the Bata, brand aspiration is what drives it. Nestle and Godrej Consumer remain two of our top picks, and we think that they are the ones which will gather more market share as this rural consumption starts to pick up. And Devyani also. Sorry, I didn't mention Devyani in the QSR. That is our top pick.
Oh, yeah, absolutely. Devyani is something that you've been bullish on for a while. LT Foods, that's going to be one stock which is going to be in focus as well. Abacus Asset Manager, LLP, that's Sunil Singhania's firm, bought about almost 1% odd stake in the company yesterday. The data, of course, came out in the bulk data in the evening at a price point of about 162 rupees per share, thereabouts. Sanjeev, I don't know if you're looking at LT Foods closely or not. Are you?
Yes, Aisha, we had a buy on it closer to that 35-40 range. It's been a multi-bagger. It is arguably the third largest rice exporter. and they have diversified their field, from rice exports to munchies. If you go on an Indigo flight, the munchies which you get are all products from LT Foods. So they have diversified their portfolio. They've done some overseas acquisitions. And even though the margins remain low, but the food security thing means that rice as a product will continue to see much more traction. So they are one of the best performing stocks as far as the basket of food security goes, but their lineage lies in the new products which they've launched. So next time when you fly Indigo, see the munchies which come. It will be from LT Foods.
Okay. Without disclosing